Chris, it's great to have you back. We actually had a couple of upgrades last week, yours included. Some of them revolved around the idea that we might get some good GMV guidance. Is that your view?
Yeah, absolutely, and thanks for having me. Yeah, it's obviously been a little bit of a rough quarter from a stock perspective, but that belies the fundamental performance. Buy now, pay later, and Affirm's installment loan options really starting to gain traction with consumers, especially during the holiday season. This is, I think, the year that last year was the year that BNPL came of age. Consumers' awareness, merchant adoption, both rising significantly. And Affirm has some really big partnerships that are ramping this quarter that we think will put a lot of upside potential to the GMV numbers, mostly Amazon and Shopify.
Where are we in sort of evaluating credit risk, delinquency risk? Are those trends stabilizing to a point that you think is safe?
I wouldn't say stabilizing. I think that's our biggest concern as we watched the stock run up last fall and stayed on the sidelines was credit risk and how it wasn't really being appropriately discounted in the valuation. But the valuation has improved dramatically. And I think it's more sort of taking into account the credit risk that exists in Affirm's model. But we're still at very, very good times for consumer credit, almost record lows in terms of delinquencies and losses. And it will get slowly normalized from here, but I don't think we're going to get some sort of really big spike, absent a macro issue. So I think it's going to be a gradual normalization. And given the top line growth we expect for Affirm, we don't see it impacting numbers anytime soon.
Hey, Christopher, let me ask you a broad question, and that is, does every fintech company need or should have a crypto strategy? You see sort of this broad range from Shopify CEO joining the Coinbase board, and then you have, Klarna on the other end sort of telling John Ford, I think it was last week, that they didn't embrace Bitcoin, and it's looking bright at the moment as we see the price of Bitcoin slump. So I wonder, does crypto factor or not factor into the way you value fintech companies?
I don't say it factors into it, but it is very important. I think that it's still early days, and don't get focused on the price. Look at the adoption, look at the progress that we're making with crypto adoption across companies, retailers, consumers. It's becoming a bigger part of our lives. The transformational technology behind the blockchain and ability to do trustless transfer will only continue to grow as more and more developers and more capital flows into the space and takes advantage of this technology. I don't think payments is really the first or best use case. I think we have some really strong payments rails out there. And if you're especially in a developed world with cards and other e-wallets, I think it's more just the technology itself creates a lot of different possibilities, and you want to be involved. For fintech companies, especially companies like Affirm, who has also talked about adding crypto, it's just a way of increasing consumer engagement. Sort of the ability to trade or buy crypto like the Square, Cash App has, or PayPal's wallets added. They're just trying to increase consumer engagement, get them to use that app on a daily basis. So I don't think it's a huge part of the strategy, but it certainly can be incremental.
Christopher, talking strategy here, do Affirm and Klarna, for example, have to become super apps and starting points for commerce in order to win long term? Because I noticed they're working on that. And how much of their long-term success actually depends on the product level data that they're getting about consumer preferences and their ability to then adjust their approaches based on that?
That's a great question, and one I still don't think we know the answer to. Certainly the biggest, I think, catalyst for Square's purchase or the Block's purchase of Afterpay is that consumer engagement and becoming more of a super app and getting people to use Cash App on a daily basis. For a company like Affirm, I think they have a really, really strong value proposition. They're not really in that merchant-funded buy now, pay later space that's so crowded. They do a lot more consumer finance loans, and they're obviously the success they're having with Amazon and Target and Walmart and Shopify, sort of points their differentiated model. I think it's more additive to them, but in terms of the valuation in the stock, for me, Affirm's ability to transform into a super app and start getting consumer deposits and acting more like a checking account for consumers is just icing on the cake. They have a tremendous opportunity in their core business. If they're able to transform into a super app, especially given the funding requirements of the buy now, pay later model, that would be just a huge, I think, upside potential, not necessarily something they need to do, more of an upside case.